Hey everybody, Smart Silver Stacker here. Hope you're doing well. It's been a few days since we spoke, but today seems like a good day to hop on a live stream because silver, it's about to do something very important. In fact, it's having a pretty good day thus far. We've got silver up, it was up over 3% just a moment ago. Kind of a choppy ride up, but that is pretty much the norm for silver. But I want to talk about what is catalyzing this run up that we're seeing in silver today and what it is that silver is about to do that is just so important from a technical and a psychological level. And we'll talk about that catalyst in just a moment. But first, let's just look at the charts. So we got silver here today. A hint, what's driving today's movement is the CPI data. And I do see a few folks in the chat there who are commenting on this. Thank you to everybody who tunes into these live streams. Do me a favor, put your thoughts in the chat. Try to keep an eye on that today. Smash that like button. Subscribe to the channel if you haven't yet. And let's get right into what's going on. So it was the CPI data that catalyzed this run up. And you can see silver is at a very, very important level right now. We're going to look at the long-term chart here. And this blue line here, this horizontal line, is $30. Now that's a very important level for silver, and we are on the verge of crossing that line. We're at $29.32, less than $1 away from striking distance of crossing this $30 line. Now, why is it so important? Well, it's a multiple of 10. It's a nice round number. So psychologically, that's fairly significant, I think, to investors and markets. But more importantly, silver has not closed above $30 in over a decade. You can see the last time silver was trading above this level was back in 2013, February of 2013. So over a decade ago. And given the backdrop that we're witnessing here for what's occurring with the precious metals, from a technical standpoint, silver is broken out from a consolidation pattern. Gold also, gold taking out all-time highs, basically. The all-time high for gold, put it in back in April. We've had a little bit of a correction. Now the metals have rallied off of what was once resistance, now becomes support. And you've got gold about to take out new all-time highs, just under $2,400. And think about this. Think about with silver when it does break through that $30 level. I don't know if it's going to happen today, tomorrow, but it is likely going to occur in the very near future. When it does, think about how much catching up it has to do to catch up to gold. I mean, gold, previous all-time high was around $2,000. For silver, the previous all-time high is from 2011. It's about $50, the nominal price. So gold right now is about $2,400. In order for silver to get to where gold is at in its breakout, you'd need like a doubling of silver. A 100% increase. You need to get up to about $60. So, it's pretty important that we're about to break above $30. And you can see, if we zoom in here on this chart from TradingView, we kind of tested this back in April following this breakout from this years-long consolidation pattern, got smacked down, hard resistance. This $26 level used to be resistance. We bounced off of that very strongly. Now, we're going to retest this. And, that's kind of the norm here. You can even see before we had this breakout, we had silver testing this upper boundary, correcting, and then blowing through it, right? So this is going to be very significant when silver does this. And, you want to stack before that, basically, I think is the bottom line here. It's not financial advice, not telling you what to do, but you want to get in before $30 because once that level is crossed, it's going to be off to the races for silver. Now, it's likely to be choppy, of course. Silver's a volatile metal, but the gains following $30 are going to be rapid and they're going to be big. You want to get some silver before that happens, make sure you check out today's video sponsor, SD Bullion. They got a deal right now where you can add a American Silver Eagle coin to your purchase at spot. It's a limit of one per customer, but you put this Silver Eagle in your cart, you'll get it at spot. They've also got any quantity pricing on this junk silver, so that's a nice combo, right? You can get a roll of this and a Silver Eagle at spot, all for free shipping because you'll be over the $200. So something to think about. Now let's talk about the inflation report that we got this morning. So the narrative that is driving markets higher here, it's driving the precious metals higher, is that we've had soft inflation. Inflation doesn't feel soft to me, right? But it's this CPI report that we got for April, which you had a slightly smaller increase in the official CPI numbers in April than analysts anticipated. I mean, inflation is still high, right? It's 3.4% year over year, core inflation at 3.6%. So still very far from the Fed's target. But, isn't it convenient here that we get this inflation relief? Because what happened was in April, we had a 0.3% increase month over month. Analysts were calling for 0.4%. That's it, right? So a small improvement over what was expected. And look, all these numbers are cooked, okay? I mean, this stuff is manipulated and massaged so many ways that they have very little to do with the actual level of inflation. I mean, if you've been shopping, you know that inflation far exceeds the official government numbers. Right, never ever trust the government numbers, Derek. I get it. But it is also important to note here that investors and markets are still being driven by this data. So we can acknowledge that these numbers are complete nonsense, and yet still they have an effect on the prices of things, right? So inflation is much worse than we are being told. However, very convenient for the Fed here that they are getting a little bit of a benefit to their narrative that inflation is cooling off, right? Isn't that a surprise that we get this dovish CPI report just as the economy is really coming under tremendous pressure from the Federal Reserve's program of elevated rates, right? So you've got the Fed, they need to cut rates to stop the regional banks from collapsing, to stop the commercial real estate from collapsing, to prevent the interest on the national debt from absolutely soaring exponentially. You know that if they don't cut rates, the interest on the national debt is going to be something like $1.6 trillion by the end of this year. So that's in 7 months. Right now it's about $1.1 trillion, a little bit higher than that. But I mean, that number is just soaring because the thing is the Fed has kept interest rates high as they've gone through a quantitative tightening, selling off some of the treasuries from their balance sheet. Yields on U.S. treasuries have gone up. And, today they're falling on this news. Today, the 10-year yield, I don't have it pulled up here, but it's declining. All the U.S. treasury yields declining, the dollar weakening. This is very, very good for what the Fed needs to do. It gives them the cover to cut rates. And that's why rates are falling, because now that inflation is, quote unquote cooling, it's all just fake numbers anyway. But the Fed needed this number basically because, yesterday we got the PPI report, the producer price index was higher than expected. There's a lot of speculation that the Fed was going to have to keep rates higher for longer, maybe not cutting rates at all this year. Now, markets are anticipating 2 25 basis point rate cuts this year. Now, ultimately, here's the reason that silver is going to blow through $30. Maybe not tomorrow, maybe not today, but in the relatively near future, it's because what the Fed is going to have to do to bail out this economy is going to be much, much more drastic than 2 25 basis point rate cuts. I mean, again, they just need the cover, the catalyst to do it. Now, a small miss on inflation isn't the cover they need to really start ramping up the printing presses. But trust me, we're going to get it. Whether it's a crisis in the banking sector, we go to war and we got to just, for patriotic reasons, run the printing press. I mean, I don't know how they're going to sell this or package it, but once it occurs, and it's inevitable because the other alternative is just letting everything collapse, we're going to really see gold and silver both just go off to the races. And silver, again, I mean, it's got a lot of ground to make up to catch up to gold. So that's why I think in silver, you're going to see the biggest gains. How high is silver going? John Baldwin says, well, I mean, there's a lot of different ways to look at that, right? Ultimately, it's kind of hard to say because it's not really a question of how high is silver going, it's how low is the dollar going, right? That's the question, as we're talking about a dollar-denominated price for the metal. But I mean, there's a lot of fundamental factors here in favor of silver, right? There's a supply deficit of silver. Every year for the past, 4 years, we've been burning through like 100 million ounces of silver more than gets pulled out of the ground and recycled. So that's very favorable. Also, the fact that we're about to enter, this inflationary hellscape of stagflation and economic destruction, that's a feather in the cap for silver as well. Because once consumers and investors get the idea of what's about to happen, they're going to be flocking into this stuff hand over fist. You're not going to be able to get it, basically. It's going to be like March of 2023 on steroids, right? I mean, you remember what happened. Everybody has such a short memory when it comes to this sort of thing. Physical bullion was unavailable. You couldn't get it anywhere. If you could, the premiums were super high. Shipping times were crazy. So, look, what's coming is going to be orders of magnitude worse than that. You want to have your hands on some physical metal before that happens. Look, this is an interesting website, Trueflation. This gives you an idea of what the actual inflation is like because, they say that a 0.3% increase is good, I guess. Last month, still a 3.4% year-over-year increase. You have to understand that all of this inflation is cumulative, right? So this site gives you an idea of the cumulative effect of inflation. The compounded inflation rate since January 2020 is that number on the left there, 25.42%. So think about that. In 4.5 years, the purchasing power of your dollar, the world reserve currency, the fiat reserve currency, has been diminished by 25%. And that is according to the official CPI numbers. So the reality is much worse. But even if you just look at the official numbers, this is a very bad situation. And if you continue to see inflation at 3.5, 3.6%, that all adds up to a very, very debased U.S. dollar. And there's no sign that the Fed is going to be able to get this under control. In fact, they're already talking about cutting, even though inflation is nowhere near their 2% target. I mean, this number is going to accelerate. And you can see, it's been marching up ever since 2020. It's been marching up since the creation of the Federal Reserve in 1913. The dollar's lost something like 98% of its value since that time. But they're really outdoing themselves now with the money printing and the devaluation. And so, they're going to get that last 2%, and you can see this all adds up, all of this cumulative inflation. There was a while when the Fed was talking about inflation averaging. Remember when the inflation was over 2%, but they said, yeah, but for a long time it was under 2%, so we're still going to keep rates low. That drove inflation up, the official inflation up to over 9%. Real inflation, again, much higher than that. But you don't hear much talk about inflation averaging anymore because, of course, to get to that 2% average, now we would need to have a significant period of perhaps deflation or below 2% inflation to get to an average level of 2%. You'd need years of sub 2% inflation, but we're not going to get that. We're going to get more devaluation, and that is what is in the cards. And there's a few things that have happened since we last spoke that I thought were interesting and kind of indicative of where we're headed here. So one is the return of meme stocks. This has been playing out this week. We had GameStop last week was trading around $17. And then this guy, I think his name is Roaring Kitty, something like that, some fellow that had something to do with the GameStop pump. He posted for the first time in years. And if you remember this from a couple of years ago, the GameStop short squeeze thing, GME and AMC, these heavily shorted stocks, which, rightfully so, right? What is GameStop? They're a store that sells like overpriced figurines and physical video games. I don't know. To me, it's shocking that this place is even still in business. It's like investing in Blockbuster or something like that, in 2024. This seems like a business that should have been closing its doors long ago. I don't know. It's 2024. Like, who buys physical video games? I don't know that much about them. Maybe handhelds or something. But, you download software these days. You don't buy, like, physical media containing software. But, GameStop heavily shorted. You saw the price spike up to as high as, I think it was over $60 at some point. This chart says, opened $64.83. So it opened up on the 14th, that's yesterday, over $60. Now it's come crashing back down. But look, this kind of insanity, this kind of bizarre market activity with these, meme stops pumping the conversion of the markets into just a casino. And look, if you made money on GameStop, great, congratulations. But this is completely unpredictable, complete wild swings. This is an indication that we are getting very close to the printing presses being run once again. And, once they do, expect more of this madness. Now, you're going to see a lot of madness in the precious metals, too, in terms of, huge gains in short periods of time, but that at least will be justified because it'll be driven by the understanding that the dollar is getting devalued. But this move up in GameStop, this meme stop stuff is just mania, right? And you're going to see a lot of these things as the printing presses get started again. This was all the result the first time around of the enormous injections of liquidity via quantitative easing and slashing of interest rates during the pandemic. That's what kicked off the first round of meme stock silliness. But someone here says video games are the same as silver. If you don't hold it, you don't own it. They can cancel your digital downloads whenever they want. Yeah, okay. That's interesting. An interesting thought in the chat there. I'm not sure I would say it's exactly the same thing. But yeah, sure. Okay. A physical game cartridge, I guess, maybe is somewhat different than a digital one. However, physical silver, the thing it has going for it is that there's a huge demand for it and it's very useful and it's a, element on the periodic table with unique features. But that's a good comment. All right. So what else do I want to talk about here today? I had a few things queued up for you. This comment from Robert Kiyosaki. So let me just read the comment. I'll give you my thoughts on it. So he says, currently in South Africa, a country I love, watching and listening to rumors of what will happen when the BRICS nations, Brazil, Russia, India, China, South Africa, produce BRICS crypto, possibly backed by gold. If BRICS gold crypto happens, trillions in fake money, fiat US dollars, will come rushing back home to America, causing hyperinflation in America, ultimately destroying US dollar. Best buy real gold, silver, and Bitcoin now and protect yourself from the crash of the US dollar. Okay, so that's an interesting comment. Now, we do know that the BRICS are working on a gold-backed cryptocurrency. This is no news, really. This is from centralbanking.com. I've looked at this story in the past, but this is from 2023, January, an announcement that the Central Bank of Iran is in talks with Russia to create a stable coin for foreign trade settlement to replace the dollar, ruble, and Iranian rial. And this digital currency would be backed by gold and operate in this special economic zone, so in Central Asia there. The BRICS have been talking for years about supplanting the US dollar. They're kind of executing their to-do list slowly. You remember at the BRICS summit last year, there was a lot of talk of one, BRICS expansion, two, an alternative currency. Well, they didn't announce the currency, but they did expand. So, it's probably only a matter of time until they launch something like this. I think launching something like this, the logistics of it, there's a lot to it, obviously, and the BRICS have to be very circumspect before they launch something like this, because if it fails, it could blow up in their face. It's not the sort of thing you can really fail at and then try it again. So they got to get it right, but they've been working on it for years. So he's not wrong about that. And if, a BRICS crypto does get launched, then very likely that would be the end of the petrodollar. I think that's the important thing to talk about here. You got Keith Weiner, who's an interesting economist. I follow him. He's got some good commentary on the metals. I don't see eye to eye with him on everything, but he says it's not even possible for Eurodollars to come back to the U.S. Their credit relationship between non-Americans and the rest of the world. Okay, but what about petrodollars, right? Because still, the vast majority of OPEC nations, they're denominating their oil sales in dollars. And so that creates a lot of synthetic demand for the dollar around the world. And that's a reason that a lot of these countries are holding so many U.S. treasuries, because they have these petrodollars that they have to recycle. And many of these nations, notably Saudi Arabia and Iran, are now part of BRICS, right? So if this currency gets released, I think the UAE is in BRICS now too, so they're a big oil exporter. So if this currency does get released among the BRICS, very likely it would supplant the petrodollar system. So that would cause a huge flood of dollars coming back. So, I think Robert's nailing it here. And, Robert Kiyosaki, I don't see eye to eye with him on everything he's said in the past. He's made some forecasts that have not come to pass. But, you can say that about almost anybody. I'm in the same boat. And I would say that the proof is in the pudding here. He's telling people to buy gold, silver, and Bitcoin. He's been telling people to do that for years. And look, if you followed that advice, you're doing pretty well. So this is a pretty good cautionary tweet here. Specifically, he's been telling people to buy Bitcoin for a long time. If you bought Bitcoin, you're doing okay, especially if you bought it on the dips. Now, same thing with gold. Silver, too. Silver's up over 20% year to date. But silver is going to be the one that really, it hasn't performed the way we might expect thus far. But when you look at the charts and you look at the backdrop of what is happening here, I think silver is going to be where the huge gains are moving forward. Just my take on things, not financial advice. But yeah, Dark Knight Cowboy says when silver hits $30, the banks will crash. Well, maybe. I mean, the banks, some of them do have significant short positions, paper short positions, but I don't think that anything that happens with silver will ever cause the banks to crash. I mean, just look at what happened with the nickel market when you had nickel spiking following the Russian invasion of Ukraine. There was a huge spike in paper nickel markets, and there was a big short squeeze. And this guy, Zhang Guangda, he's a nickel magnate based out of China. I think he owns some Indonesian nickel mines or something like that. Well, he had a huge short position, and rather than send him to the cleaners, his friends at the LBMA just halted trading. They just shut everything down. And they froze trading. They got everything under control. They stopped the short squeeze. And you can bet that if silver faces a significant short squeeze, they will do the same thing in paper markets, right? The futures markets will just get shut down. I mean, they already did it with nickel. Why wouldn't they do it with silver? I don't think anybody would bat an eye at that if you saw things running away. But that's why you got to hold physical silver, right, outside of the digital system, because if there's a huge short squeeze in silver and they shut the paper markets down, well, imagine what's going to happen to the physical market. I mean, it's a little different than nickel because silver is so much more compact, right? And there's this whole history of holding physical silver as money, so yeah, I don't think the banks are going to crash because of a spike in silver, but you could see the paper markets crash if that happens. Definitely the banks will get bailed out if that occurs. Burning Tyrant says, Bitcoin is a trap. Sell, sell, sell. Well, maybe. I don't know. It's not digital gold. It's not digital silver, but it's also performed much better than the metals thus far. So, I mean, maybe that's just sour grapes or maybe it's a trap. I don't know. So Bitcoin has some interesting properties that the metals don't have, right? You can carry it around with you in your head in just by memorizing a passphrase. You can't do that with gold and silver. Of course, you can't build a solar panel with Bitcoin either. You got to have silver to do that. So, I mean, they're not the same thing, but it is a non-dollar monetary type asset. So I think there's something to be said about it. And certainly anybody who's bought Bitcoin when it was cheap, I mean, they've done pretty well for themselves. If I was sitting on a bunch of Bitcoin gains, I probably would consider rolling some of that over into physical metals. But the Bitcoin that I have, I just let it sit in a offline wallet, and I'm just kind of holding on to it like a lottery ticket. I don't plan to sell it. I don't plan to do anything with it. We'll see. It's kind of a wait and see thing. I've got a lot more gold and silver than I do Bitcoin, though. I will say that. So yeah, look, silver's about to break out. From a technical standpoint, look at that. We're back up to 29.41. Is silver going to break out today? I don't know. I mean, there's the potential, right? I think that now this quote-unquote soft CPI number has set the stage perhaps for the breakout. We might need some other kind of catalyst, but maybe not. I mean, the week CPI is in for the month. This may be setting the stage for the ascent above $30. And again, it's going to be choppy. I mean, we might go through 30, close, retest, come back down. But ultimately, that $30 level, if we get a solid, let's say a weekly close above that price, I don't think we're going to see under $30 again anytime soon. So I think now is a good time to be stacking. And of course, silver's gone up a lot since this breakout. It's up almost 20% or something like that over the year. I think a little more than that actually year to date. But right before a breakout like this is still a good time. I mean, if you're a new stacker, this is actually an excellent time to be getting into the market. We're about to blow through a level that we haven't gone through in over a decade. So those of us who have been stacking, I mean, yeah, we've been accumulating, but we missed out on some other things opportunity-wise, perhaps. That if you're a new stacker, now is a really good time to be getting into it, I think. And now is definitely not the time to be selling your precious metals. Now is the time to be holding on and getting ready for that rocket ship, which is going to be above $30. And I'm not saying, people get very critical of the whole moonshot thing because I think that they've been burned in the past. The silver squeeze, there was a lot of talk about how high silver was going to go. Well, I mean, the only thing that's changed since then is that the debts and deficits have exploded higher. The inflation has exploded higher. So I see no reason to think why silver wouldn't take off once we reach the appropriate level here. The only thing is that because it's been held at this low level for so long, it's been so suppressed, and whether that's by manipulation or by market forces, whatever, I'll leave that for you to decide. Feel free to leave me a comment down below if you're watching this later. Why do you think silver has been so cheap for so long? But regardless, it's like holding a balloon underwater, right? The further down you pull it, or a beach ball or something like that, some inflated object, the further you hold it underwater, the more force and more violently it's going to break through the surface when you release it. So the fact that silver has been so cheap for so long, I think ultimately that just means that the price will be going that much higher once we do get the breakout, and it appears that we are very near to that point. So again, leave me a comment down below to let me know what you think. Stay safe and happy stacking, everybody. Thanks for watching. Don't forget to smash that like button. Subscribe to the channel if you haven't done that. Yeah, suppression has really been a gift. Joe's right. It's been an opportunity to accumulate a lot of this stuff at very cheap prices. I've certainly been taking advantage of that. I have, I don't give advice or whatever, but I've been encouraging people to examine, physical metal as a safe haven for some time now. And I think that is about to pay off. So let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking.